Hi, good morning, guys. This is Dylan Jovanet behind the markets. Just wanted to talk a little bit about the declines that we've seen in the past couple of days. So one of the things, there's a lot of mention about Powell changing or eliminating. He said it's time for us to remove the word transitory from inflation. No kidding. I mean, really, do you think that people selling you a gallon of milk are going to start charging less for it in 6 months from now? So what does that mean in practical terms? Why do stocks go down? Basically, you have to understand that there's an inverse relationship, like a seesaw relationship between interest rates and stocks. So when interest rates go down, stocks go up. When interest rates go up, stocks go down. So what's happening here is Powell is saying, we've got to remove the bond buying that we've been doing. We've got to lower the tape. We've got to taper quickly. What that's going to have the effect, so the Fed's been buying billions and billions of dollars of bonds every month. That's been keeping and holding interest rates down, like really suppressing interest rates. The fact that they're going to stop buying as much, slowly interest rates are going to start to rise. That's why stocks are getting repriced lower. This is not an emergency. This is a very, very healthy thing to happen, frankly. I'm surprised it's taken so long, like many folks. I've always kind of called this the cocaine stock market because in all my years of doing this, 30 years of doing this, this is the first time, in 2008, the real estate market, even the village idiot was flipping houses and making money. And during the dot-com bubble, again, the village idiot was on TV with a sock puppet. But here, the village idiot is getting paid, gazillions of dollars, is buying real estate in the metaverse. I just heard somebody pay $2.4 million for a plot of land in something called the metaverse. Now, that's when things have gotten crazy. So I call this kind of a cocaine stock market because, excuse me, that's the coffee machine behind me. I call this kind of a cocaine stock market because it's like a party at 5 in the morning where everybody's out of their minds, literally, still partying and raging like the sun isn't coming out. Actually, we're probably like sun up already, frankly. That's how late it is in the party. And all the host of the party, Fed Chairman Powell, is doing is saying, I'm not serving any alcohol, but there's still a ton of alcohol and party stuff out already, like enough for a day. It's gonna be a pretty big hangover. When this is all said and done. It really is kind of like that. We're going to have a cheap money hangover. The bad news in the short term is, the Fed 10-year bond's at 1.47%, so they're going to slowly increase that. And as that happens, stock prices will get repriced lower. So, the bad news is that's going to be a choppy market in the short term, midterm. The good news is in the long term, it's going to bring a lot of values and bring normalcy and balance back to the force, Luke. So we have to bring balance. Fed Chairman Powell is trying to bring balance back to the force. So don't get too rattled. This is a repricing of the stock market, given the fact that the 10-year bond, Powell's going to stop buying bonds. That will slowly send up the yield on the 10-year bond, which will cause stocks to go down. Anyway, that's all I have for you today. Have a wonderful, wonderful Thursday.